Hello and welcome to the Banker's Fresh Perspectives series in association with Bank of America Merrill Lynch. I'm Joy Macknight, Deputy Editor at The Banker, and I'm joined by Paul Taylor, Head of Sales in Europe, Middle East and Africa in Global Transaction Services at Bank of America Merrill Lynch to discuss how major forces of change are driving payment innovation and transforming correspondent banking. Thanks so much for joining us today,
You're very
Paul.
welcome.
What we're seeing is so much change going on in terms of demographics, but then there's also this whole move towards digitalization.
Yep.
Sort of what kind of impact is that making on the payments world?
It makes a huge impact. When you consider that 59% of the North American workforce will be centennials or millennials by the year 2020, 75% of the global workforce will be millennials by the year 2025. It has a massive impact because what you have to remember is that the world that these millennials live in and their expectations and what they expect in terms of services and technology is vastly different from the world that created the banking infrastructure we have today. And so you're going to see a massive change driven by that demographic shift towards the millennials and the centennials over the next few years.
And what sort of things are they expecting, especially in payments?
I think in general, they expect everything on demand. They expect immediate response. They expect immediate technology. They expect transparency. And they expect services which are tailored very much to them. They don't really recognize a world which tells them that these are the rules and that it may take 3 days and that, I'm sorry, but there's going to be an obligatory charge to move something from here to here, which is your property. And that is a massive shift for banking.
So cross-border payments have particular challenges. Do you think the payments model is really keeping up to the speed of change that we're seeing today?
I think we have to remember that the demand for cross-border payments hasn't been as steep as it is now, and that in many ways the drive for cross-border payments is creating a level of innovation. And so just as we saw in Europe in 2008 with SEPA, we are now seeing consistent payment formats. So for example, ISO 20022, the XML format, which means that payment systems can be interoperable between different markets, between different payment types. That facilitates cross-border payments. We see international banks facilitating, banks and financial services providers facilitating international payments on their own books around the systems. We see the rise of technology like distributed ledger technology, which allows companies to effectively transact between each other without reference to a centralized ledger. All of these technologies, including, of course, Swift GPI, which will speak to the transparency of how those payments move from one place to another, all of these technologies are going to facilitate a great acceleration in the availability of cross-border payments, in the reliability of those payments, and ultimately in the cost, where previously it was prohibitive, and now with the acceleration of technology, it should be far more accessible to more people to have cross-border payments.
Okay. When we talk about real-time payments or immediate payments, do you think that the securities concerns sort of escalate at that point as well?
I think in a world of banking, which looks more like something out of a Charles Dickens world where everything was done manually by clerks, I think the idea of a faster payment was a non-starter. But I think in a digital world, it's not so much the digital aspect which makes it less secure, or the fact that it's faster which makes it less secure. It's about making sure we have the right authentication. It's about making sure that we have the right security systems in place, the right codes. And as some other people have commented, of course, it's not normally at the point of payment that you have the security risk. It normally happens before the payment. And so no, I don't really think that faster payments pose a greater threat to security than any other type of bank transfer.
So this fast pace of change is happening all around us. It's a bit hard to predict what the payments model will look like in maybe 5 years' time.
Yes.
But can you give us some insight?
Banks of the future are a bit like smartphones. They provide connectivity. They provide the ability to transmit and receive. In the case of a phone, it's a message or a call. In the case of a bank, it's money. And banks will continue to do that. They will continue to provide that core infrastructure. But just like smartphones, people will want to use that infrastructure to do other things, which will typically be provided in the form of apps. Right now, we see a proliferation in the fintech world. We see a proliferation of technology. We see a proliferation of providers. And going forward, that technology and those services will be available much like apps on a smartphone via banks, where banks will bring that technology together on that core infrastructure, the smartphone, and will deliver it as part of one banking or financial services package.
And how do you think banks can best position themselves when you talk about this sort of ecosystem? How can they best position themselves sort of to take advantage of payment flows?
I think in a couple of ways. Number one, banks are huge aggregators of data. With all due respect, there are not many institutions that any of us deal with that bring together as much data, both from the consumer level, but also from the corporate or even the public service level. That data will be something which banks will be expected to handle and to manage more in the future in order to provide the basis for all of these digital services. I think they will also act as the glue between different types of services. So if you think, even today we see great interest in apps which deliver in the FX space, which deliver in the money transmission space, which deliver in the reporting and statement space. Banks will be expected to aggregate a lot of those different financial services and provide them in one seamless package to the consumer of that service, whether that consumer is an individual, whether it's a financial institution, or whether it's a global corporation.
Okay, great. Thank you so much for your insights, Paul.
You're very welcome.